All right, friends, now we're going to talk about due diligence and valuation as well as indices for real estate. All right, the first one is due diligence. There are 5 elements to it. First element is review of current market conditions and also forecasted market condition. What is outlook? Now, we use web-based aggregators to collect data about current market conditions, and we need to be cognizant of the fact that oftentimes the data that is collected could become stale. So we want to see the most recent transaction prices, sale prices, to get a feel for current market condition. That has to be overlap with an analysis of what stage are we in with respect to the real estate life cycle that we talked about. Remember, within the real estate life cycle, you could be in recovery phase or you could be in expansion phase, and so forth. The second component of analysis, second component of due diligence is review of current lease and outlook for future. And what we want to do is to first look at what is the length of the current lease and what are the vacancies in the area. So you want to look at, what are the market rents for similar properties, what are the vacancies, as well as an estimate of potential future income. So that is to determine, again, the market conditions with respect to the rental income. The third component is financial review. You're looking at audited financial statements to do a double check on the financial condition of the prior owner, the seller, and you want to see what this property was producing in terms of audited financial statements, whether the numbers that you were given jive with what the financial statements reveal. We want to also use that review to include double checking specific expense items. Say, for example, property taxes, you can double check it with actual tax levied by the county or whatever local jurisdiction is. Other reviews could include double checking utility bills to make sure that it truly reflects the operating expenses. The fourth element is documentation review, making sure that the seller has a clean title free of any liens. And the fifth one is property inspection. A comprehensive engineering, physical, and environmental inspection will reveal any problems before purchase. So you want to check for all of those issues prior to signing the dotted line. You also want to look at service agreements and the maintenance calls, so as to give you a peek into any potential problem areas for the physical property. Let's now talk about valuation approaches to valuing real estate. So the first one is simply a cost approach. So you have a apartment building, you want to value it. What you can do is to try to come up with a cost estimate. How much will it cost today to build a brand new building with the exact same features, with the exact same dimensions, and so forth. Now, the cost approach entails calculation of value of new building, and then you subtract any depreciation / obsolescence, meaning an older property may have certain features that are not as valued in the current market. So those are what we call as obsolescence effects. And then old building will be obviously depreciated, meaning not accounting depreciation, but degradation in value as compared to brand new building. So the difficulty here is that estimation dollar value or euro value of that element, the depreciation / obsolescence. The calculation of the value of a new building cost approach, this portion is rather straightforward. You can get estimates of calculation that